Hi, this is John Kamarianos for Capital Considered, coming to you from the spot I like to hang out in at Rehoboth Beach. This week, the advice is don't take advice from political leaders. And here's what I mean. We had an event this week where Pam Bondi, Attorney General, gave congressional testimony, and she touted the return of the S&P 500 somewhat bizarrely in a hearing that had nothing to do with finance. So I thought I'd compile a chart here that shows the return of the S&P 500 for this year versus the returns of other indices. So the S&P 500 is at the very top here. There's no bar there because the S&P 500 has returned to nothing this year, exactly zero. And by the way, this is the S&P 500 total return, which includes dividends. So second on the list, the MSCI Europe index is up 5.28% this year, the first 6 weeks. This is data through February 13th again. And we're doing the investments in foreign indices the way most Americans get their exposure. You own the stock and you own the foreign currency exposure. Most people don't do it with a currency hedge, so we're doing it in dollar terms. Third on the list, developed markets. This is Western Europe, Japan, Australia. Developed foreign markets are up 7.81%, much better than the S&P. Now we come back to the U.S. S&P Mid-Cap 400, mid-cap stocks, U.S. mid-cap stocks up 7.93%. After that, S&P Small Cap 600, U.S. small cap stocks up 8.9% for the year. Again, all of this is through February 13th, Friday. Now we go back overseas, second to last bar, emerging markets, the MSCI EM or emerging markets index in dollar terms up 10.81%. Last on the list, we isolated Japan to see what that looks like. MSCI Japan index in dollar terms up 14.95% for the year. So the U.S. worst performing index or market on this list. Don't take your investment advice from political leaders, regardless of their party. While we're on the topic of index returns, I wanted to show also sector returns just for the U.S. market. This is the S&P 1500, which is the 500 big ones, the 400 mid caps, and the 600 small caps. So the S&P 1500 index broken down by sector. You can see energy is at the top of the list at almost 22% return for the year. Materials up 16.5%. Consumer staples up 15.5%, and so on. The index itself, the main index, up less than 1.61%, fifth from the bottom. And then financials and technology are the worst two performing sectors for the year, both of them down over 4%, as you can see from the bottom two bars. So that's certainly a turnaround for technology. But that's the news for now. Don't take your advice from Pam Bondi or any other political leader. Diversify overseas. This is John Kamarianos for Capital Considered, signing off. Thanks for watching.
No information on this podcast should be construed as investment, tax, or legal advice. This podcast is not an offer for advisory services or to buy or sell securities. Before making any financial decisions, consult with a qualified professional advisor who can assess your individual needs and circumstances. Past performance is not indicative of future results, and all investments carry risks, including the potential loss of principal. Securities discussed in this podcast may be holdings of the host or his clients.